Mr. Singh, MD and CEO at Mahindra Holidays, is with us. Sir, thank you so much for taking out time for us. What is your outlook on margin ahead? Are they sustainable at the current level?
So we have grown by about 14% in terms of our member additions, and not only that, our resort income also grew by about 12%. So various initiatives that we have been taking in engaging with our members is helping us grow our referrals. It is helping us also gain new members. For example, in terms of our geographical expansion, we are now seeing movement in the tier 2 and tier 3 markets, as well as our ability to source good quality leads through the digital, and we are using means like artificial intelligence and machine learning tools to source leads through the digital. So all these initiatives put together, along with the fact that our proposition remains strong of 55 resorts, is helping us to gain members, and this quarter has been an exceptionally good quarter in terms of the member additions as well as the resort income. And not only that, our profit margins also improved by about 1.2% from 18.1 to 19.3%. This is quite heartening, because the operational efficiencies that we have been driving are helping us to improve our margins as well. And I must mention here that while I am talking about margins, and I must also mention about the profit growth. Profit growth has been about 14%.
What is your outlook on margins going ahead? Do you believe that the levels that you've been clocking in are sustainable as well?
So as far as margins are concerned, as I told you, the margins have been driven by our operational efficiencies that we are bringing in resorts, as well as in our costs of acquisition. I definitely believe these margins are sustainable. And I must mention, however, one point, that in this quarter we are aided by higher occupancies. As you know, April, May, June is holidaying season, so our resorts experienced almost the highest ever efficiency at about 89.4%. So you would imagine that in July, August, September, the occupancies would not be as good. So to that extent, there will be minor variations, but I would call them as minor variations.
What is the view on average realizations per member now? How much is the advertising spend slotted for digital and referral channels?
So average realization roughly remains similar as the last quarter at about 3.38 or 3.4 lakhs. I must also mention here that we have launched a new product called Bliss, and this is for 50 years plus population. And we are finding a good response. Of course, this is a 10-year product. This is a points-based product and far more flexible product. But we only sell it to people who are above 50 years and who would probably want to just, be the members for 10 years and experience. And maybe they can renew it after that. Also, one more Bliss. And this product is gaining significant momentum. But, the AUR of this product is lower at about 1.8 lakhs. So some amount of impact on AUR has been due to this, even though our overall sales mix is improving. And I must also mention our strategy of focusing on, and you asked a question on the advertising, and I must say that the real focus that we have right now is to acquire right quality members who are willing to pay higher down payment and who are willing to go on lower EMIs, because we believe that we are in the business of maximizing the member lifetime value. And that is best served when we are able to take members who are actually willing to commit upfront higher down payment. And that's one of the reasons why you're noticing our cash balance has moved up to 531 crores. Coming back to your question on advertising on the digital, our digital advertising is growing. In fact, we have spent a lot of money in content creation. If you were to simply advertise in digital, it won't really make an impact. We need to create content which is engaging. And I'm quite happy to share with you that our positive mentions and engagement on social media are at an all-time high. And we are seeing momentum in terms of members as well as prospects engaging with us on the digital media.
The vacation ownership space is clocking in a very robust compounded growth of about 18%, and it still remains one of the most under-penetrated travel industry. Why do you think that is, and when do you think things will change?
So part of the reason is I think there is a lack of awareness. People really don't understand the benefits of vacation ownership. In India, as you know, we are the pioneers, and you may probably be happy to hear that with the acquisition that we did on the Finland based company called Holiday Club Resorts, and with their member base, we are now the largest vacation ownership company in the world outside of North America. And as you know, in America, this is a very big business. With the rising affluence, what happens is that people begin to understand that holidaying in resorts and going through experiences, and I think people are now seeking experiences, and that's why we are building our experience ecosystem also, is going to increase. And as you know, that our product is can be afforded by people who would probably have an earnings of about 15 odd lakhs per year or more, and we have to target the right audience. We have to create awareness. We are the industry leaders. I think that's really the task upon us to increase the penetration.
What is your update on your plans to enter US and the Sri Lankan markets?
So as we speak, we are scouting opportunities both in Sri Lanka and US, which we can, even if we don't acquire properties there, which we can take on lease. Those plans are intact. We are also looking at properties in Northeast. We are also looking at properties at various other locations in Southeast Asia as well as in Europe. So those plans are definitely on the track, and I'm sure we should be able to share with you in some time to come.
All right, Mr. Singh, thanks much for joining us and telling us what your plans ahead look like.